Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We've been coming to you live from the Financial Markets Quality Conference at Georgetown University's McDonough School of Business throughout the day. Joining me for the segment, we have Dan Draper. He's the global head of ETFs over at Invesco. And we're going to focus on what's been a pretty volatile October and what market conditions look like going into the remainder of the year. Dan, thanks so much for joining us.
Pleasure.
On set today at Georgetown. Now, traders went to volatility. They got it back in October.
They have. Obviously, it's a trader's market. I think for longer-term investors, a little different scenario. I think obviously sticking close to good asset allocation, diversification. In particular, we've seen in ETFs, as you can imagine, with the leadership and growth and momentum type strategies, particularly in ETFs, the volatility has shaken out some of those individuals. So I think for those who are rethinking their long-term asset allocation, areas like low volatility, quality have become a bit more popular, I think, in terms of diversification. And we're also seeing in fixed income using a bit of factor weighting towards a shorter duration and higher quality in fixed income seems to be very popular as well.
I think we have to remind investors, too, that over the past 10 years, we've seen a market that only goes up.
That's
Markets
right.
are supposed to go up and down. That's why you have averages. And I appreciate what you said about thinking more long-term as an investor, because you make yourself crazy watching these 3-4% swings day to day.
That's exactly right. And I think that's why, Harry Markowitz, kind of the acclaimed founder of modern portfolio theory, always talks about diversification. That's the only free lunch you're going to get in investing. And I think when you are in a momentum-driven market, low interest rates, high correlations of individual securities, asset classes, you can kind of fall asleep at the wheel. And I think this is an important wake-up call to make sure as interest rates rise, risk premiums normalize, am I properly diversified? And am I sticking to my long-term goals? And I think that's what Invesco ETFs are focused on, factor investing. We're trying to give those building block products across asset classes to really help that diversification.
Yeah, when you say factor-based investing, what exactly does that mean? Is it basically asset allocation or?
That's right. But if you think about, the market is, market cap weighted, owning the S&P 500, what have you, but then being able to maybe break down market returns and find additional risk premium. So the average person would think about something like style investing, large cap, small cap, growth value, or even maybe sectors. But what we're doing now is by, using technology, and ETFs is kind of leading this, is being able to find these other risk premium, which can really benefit diversification, like low volatility, being able to look at quality. Some people consider income, but being able to weight a portfolio for a real customized outcome. Not everyone has the same retirement goals. Not everyone has the same time horizon. So if we can really help in the hands of a strong asset allocator, which our Invesco Solutions team is a strong partner of our ETF business, if we can really work together, we're looking to get definite outcomes. And in a modern digital world, this is this idea of mass customization. That whether my savings pod is small or large, I should be able to get a lot more precise and really cost-effective solutions as well. And that's really I think the idea behind factor investing, thinking about it almost kind of like DNA, being able to break it down and rebuild it in a way best for the customer.
There's no question that the growth has been stellar in the ETF industry, and it seems to be that there's new ETFs issued all the time. Do you think the market is getting saturated at this point?
That's great. We get a lot of questions. I think that you do find the market itself has a way of determining that in terms of, the really strong products will get, the trading liquidity, and usually the assets will kind of follow. So I think it has a kind of self-selection process. I do think, though, that for large leaders like Invesco, education has always been important. When we were small, now that we're 230 billion of assets, it's even more important. And I think that's where in this ecosystem I mentioned, like solutions, working with really skilled asset allocators, working with financial planners, working with other professionals who are taking our building blocks and building a holistic approach to reaching a good outcome for clients. I think that's where we're now trying to really educate and reach out into these other areas of our ecosystem and making sure that the users and their advisors are really well equipped to use them the right way. So I think if products aren't effectively, delivering on a risk return basis what they're supposed to, you're seeing those close or really not survive.
Right. Let's play some inside baseball since we're at the conference, and we have you here. You are on the exchange traded product panel. What are some of the issues that you guys are going to discuss?
Well, it was, I think, looking at kind of the agenda, I think really thinking about top of the orders from a regulatory perspective, the new ETF rule, which has been proposed and open for comments by the SEC at Invesco. I mean, we're very encouraged. We've provided some comments, but overall, we think that by moving away from a very fragmented exemptive approvals for different issuers, by standardizing that process, we think is good for investors. and being able to offer them, more of a transparency around the process and more of an equal playing field. So that we're quite bullish on, and we'll kind of talk about that. I do think there's some nuances around market structure, areas like fixed income. How can we continue to work to provide better liquidity, transparency, price discovery in important asset classes like fixed income, which are growing very quickly, and I think as well just the impact of technology.
Right.
How can we, within kind of our regulatory and even client constraints, utilize technology for our clients in a better way and provide those solutions? So it's going to be a great panel, and I'm really excited to be part of it.
All right. Well, thank you so much for joining us at FMQ, and thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter.